According to some reports, the M&A market is at a 30-year low, at least so far for this year. That was not the expectation at the beginning of it. Our next guest says that deal-making is very much alive, though. The number of deals over $500 million up 20% year over year. For some more insights on that and on the rise in company separations and spinoffs, I want to bring in David Dubner. He is the new COO of the global M&A and global head of M&A structuring at Goldman Sachs. Good morning to you.
Good to be back. Thank you.
So here's what we all want to figure out. We're going to get tariffs this afternoon. I imagine the tariff piece has been one of the reasons that M&A volume on a total basis has been as slow as it is. Do you expect anything to change in the next, I'm going to say, not even the next day or even the next week? Do you think anything's going to actually change in the next month?
We do. So just to level set, if we go back to the start of the year, we were cautiously optimistic for M&A volumes,
right,
25, for three reasons. One, corporates looking for strategic growth, corporates looking for focus through simplification, and sponsors breaking the logjam, right, of an aging inventory and a need to return capital. We've seen all three of those unfold, and that is, as you let in, what's driving, as we look at transactions over $500 million, which is 80% of all M&A, it's up 20% year over year. And we think those trends in the dialogue that we're seeing will continue.
But just so, because it's like we're saying two totally different things. I'm looking at total M&A volume.
Right.
And it is at, like, not an historic low, but kind of. I mean, this is bad. It's, like, bad for the business.
Right.
And then you're saying, no, it's actually quite great. So which is it?
So the divide that we're having here is deal count. If you look at small business M&A, transactions below $500 million,
right,
that is down 25%, right? And as you're highlighting, it lows. And that's likely driven by increased volatility, likely also around tax uncertainty that relates to small businesses. On the larger side of the spectrum, when we think about larger deals, in particular the middle market of M&A, $2 to $5 billion, that's been on fire year to date. And in part of that, the backdrop is sponsor M&A.
Right.
That logjam beginning to be broken, and we see those activity levels up 60 to 100%.
So when you think, though, about the tariff piece, you think that has nothing to do with this?
I think there is absolutely greater caution that exists in the C-suite, certainly in the Americas. We have seen a shift in the larger deal sizes outside of the Americas, more to Europe and Asia,
right,
where perhaps the risk appetite is increased relative to some of the uncertainty that exists here in the U.S.
I mean, it hasn't been 100 days yet. Right?
No, we can't over-index. Exactly.
And it wasn't great in the last administration, M&A. So wouldn't it take more than 100 days to get things going?
For sure.
No, but just, hold on.
Yeah, but you heard Brad Gerstner say everybody's been called back from the beach that's in M&A. They're working on all these things. You're hearing from him that, I mean, your mindset that these tariffs are the end of the world for all business, including M&A, it's just...
What does staffing look like?
That's from your POV. That's your preferred POV.
What does staffing look like on the investment banking desk? How busy is everybody? What's the pipeline look like?
So we are hiring vis-a-vis the middle market, sponsor M&A. We are growing. We're hiring in that particular part of the business because it is more active. I would say staffing levels remain robust because we're seeing activity levels and dialogues increase.
What about big business, big companies and potential for mergers there?
Again, we're seeing more of that activity outside of the U.S. right now, and I think to the extent later today we see greater clarity or greater certainty.
Do you think we're getting greater clarity? Because as we've discussed many times, this may be the beginning of the negotiation, not the end.
I wish I knew. We're going to have to wait and see. I hope, and I think business leaders are hoping for greater certainty.
Are you going to shut down your cross-border M&A business? Meaning, like, when you think to yourself, is there cross-border deals to be had? International buyers who can buy U.S. businesses. Do you actually believe that that's even a plausible thing that's going to happen over the next 3 years?
We do. Cross-border activity has actually increased.
Into the U.S.?
Into the U.S., and I'll give you an important reason why. The U.S. equity capital markets continues to be the deepest, most liquid market globally. And we're seeing, in particular, European companies, also Asian companies, look to leg into the U.S. capital markets for listings through carve-outs, IPOs, and mergers to access, for example, indexation, which is robust and more robust in the U.S. than in other markets.
When you think about the big type of deals in terms of antitrust. Part of this whole idea that there was going to be all of these deals was that actually the antitrust and regulatory world was going to be a lot easier. You talk to most media company executives, by the way, they'll say it's not any easier than it was before. In fact, it might have actually just gotten harder.
Yeah, look, to Joe's point, we're early. We're one quarter in, so time will tell. What I am encouraged by is some of the commentary coming out is that the new administrators look to have more constructive dialogue with corporates, and that could be a positive as we think about activity.
But just on the facts, forget about POV. Why has it been worse then so far?
It's been
the numbers are worse. They're demonstrably worse. The data
deal count M&A.
Correct. Take away your point of view. Just look at the data. The data is worse today.
Every question you've asked, he's told you no.
I understand, but
small business
because it's like.
But does it go in or does it still stay out here?
It's not raining out.
Has it been 98 days? How many days?
80-20 rule. 80% of M&A is transactions over $500 million. Those deals are up 20%, year over year. That's what is giving us continued optimism, and to the extent we see greater
and that's
certainty,
domestic?
That is globally.
Right, okay. That's globally.
That's globally.
What about the domestic side?
Look, volumes are up across Americas, Europe, Asia. We do see a greater...
Volumes are up.
Volumes are up, but again, the larger deal sizes, right? We see a greater, when we look where is there more activity, we're seeing greater activity in Asia first, Europe second, then America's third. And that may get to your point, Andrew, that with greater macro certainty,
right.
That can
No,
help
I think if we get the greater certainty,
Americas.
hopefully that helps the whole situation. I'm just looking at the situation, and it's not what... Is it what you thought it was going to be in November?
Meaning up, that we were hopeful.
Are you surprised? I mean, if you go back and look at the reason I'm asking these questions is if you go back and listen to the conference calls that the CEOs of your firm and others gave about the pipeline and what was supposed to happen and what has actually happened, they are like two different things.
Exactly. Uncertainty is the enemy of confidence, and confidence is what fuels M&A, right? So I completely agree with you. More certainty will breed more confidence, which will breed more M&A, and that is our hope. Hopefully today and as time goes on, that we will continue to see.